The beginning of the backlash? For roughly 30 years, from the early 1940s to the mid-1970s, the mixed economy of U.S. capitalism achieved unprecedented success, nurturing innovation, sustaining stability, and generating opportunity and prosperity. This successful model rested on a series of social and political understandings, compromises, and accommodations. Given their power in U.S. society, leading business figures were necessarily key participants in this success. Prominent Republicans became believers as well. The most famous GOP convert was the general-turned-politician Eisenhower. He understood that the Republican Party needed to make its peace with most of the policy achievements of the previous 2 decades. That's the 1930s and 40s. He becomes president in 1952, I think. In 1954, for example, Eisenhower privately ridiculed the desire of conservatives to roll back the New Deal. Eisenhower said, "Should any political party attempt to abolish Social Security, unemployment insurance, and eliminate labor laws and farm programs, you would not hear of that party again in our political history. There is a tiny splinter group, of course, that believes you can do these things. Their number is negligible, and they are stupid." End quote. Eisenhower's point was that the mixed economy was an established reality and there was no going back. Eisenhower's domestic policy agenda focused on economic growth, and Democrats would criticize him for his reluctance to rely on Keynesian policy to prime the economy. Okay, so Keynesian policy is referring to Keynesian economics, and you don't have to worry about the details of that, but just so you know, in macroeconomics, which you'd be thinking about economics in particular on a national scale, Keynesian economics has been the primary theory since the 1930s up to today. Milton Friedman, whom you know, in the 1960s and 70s did some work that went against some of the Keynesian ideas, but still, by and large, Keynesian economics has been the central economic theory for macroeconomic theory for almost 100 years now. Okay, so Eisenhower's domestic policy agenda focused on economic growth. Okay, then this. Yet his administration devoted substantial energy to policies designed to improve the country's long-term economic performance. And on economic issues, the moderate consensus continued after Eisenhower left office. Although John F. Kennedy famously adopted a more Keynesian stance on the budget, built around business-friendly tax cuts, in most respects his economic policies followed the tracks laid down in the 1950s. When the GOP veered right with Barry Goldwater's candidacy, this would be 1964, and Lyndon Johnson tacked left with the inclusionary policies of the Civil Rights Act and the War on Poverty, much of the business establishment went with Johnson. Richard Nixon was one of the last Republican leaders to embrace the mixed economy, and embrace it he did. Nixon's effort to fashion a new majority involved positioning himself to the right of Democrats on issues of race and crime, but he was willing to be a moderate, even an activist, on matters related to the economy. He supported major extensions of the regulatory state, including big new initiatives for environmental and consumer protection. He favored a guaranteed annual income, a huge expansion of Social Security, and healthcare reforms way to the left of what Bill Clinton or Barack Obama ever proposed. Nixon's moderation was driven in part by political calculations, encouraged by Daniel Patrick Moynihan, one of his leading advisors on domestic policy. He took the 19th century British Prime Minister Benjamin Disraeli's liberal Tory stance as a model and sought to appeal to working class and middle class whites with his support for social insurance and his cautious backing of many of the new regulatory measures coming out of a Democratic Congress. But it wasn't all politics. Nixon accepted the notion that in a large and complex society, government had a fundamental role to play in fostering economic growth and social prosperity. This went beyond the macroeconomic management of boom and bust cycles and incorporated support for collective bargaining, extensive social insurance, and a reasonable social safety net, the provision of crucial public goods, and interventions to tackle thorny market failures. As the 1970s continued, however, the mixed economy came under concerted attack by a more powerful and more radical economic elite. At first, the economic and the ideological components of this challenge were largely independent of each other. So the economic, I think, would just be the business side, and the ideological would be the theoretical side, which just, in principle, thinks that there should be lower taxes and smaller government. Okay, so at first these were independent, but over time they fused as the increasing dominance of market fundamentalist thinking on the right encouraged shifts in corporate behavior and public policy that exacerbated the intellectual and economic distinctiveness of the United States' new economic elite. Okay, so this would be, over time they fused as the increasing dominance of market fundamentalist thinking on the right encouraged the deregulation of finance, the slashing of top federal tax rates, growing links between the financial and the corporate sectors, and an upward spiral of executive pay. An industry of enablers sprang up, with journalists and think tanks and professional associations and lobbyists all helping push the new line, and eventually the movement captured its biggest prize, the Republican Party. Ideas were crucial, especially in the initial right turn, within conservative political and intellectual circles and in corporate boardrooms. Elements of the fringe libertarian views of the novelist and philosopher Ayn Rand gained prominence. Randian thinking came in both soft and hard forms. An obsession with deficit, say, versus die-hard opposition to taxes and government spending. Okay, so the first one would be the soft version, and this die-hard opposition to taxes and government spending would be the hard version. But in both forms, it had important implications for U.S. understandings of shared prosperity. The valorization of shareholders, that is, in this context, valorization would mean treating them as though they have valor, bravery, even if it was often a cover for the acquisitive aims of top executives or investors planning hostile takeovers. The valorization of shareholders challenged the notion that wealth was a social creation that rested on the efforts of multiple stakeholders, including labor and government. Instead, it implied that prosperity was generated solely by entrepreneurs and investors. Okay, so 71, I think, is where the authors talk about Steve Jobs. Instead, it implied that prosperity was generated solely by entrepreneurs and investors thanks to their creativity and daring. In its radical manifestation, it even became something of a conspiracy theory, dividing the world into a persecuted minority that heroically generated prosperity and a freeloading majority that used government to steal from this small creative elite. Okay, so you should be able to tell from the context that dividing the world into a persecuted minority and a freeloading majority is not what the authors themselves believe or agree with. They're just saying that this is the view that has developed in contrast to support for the mixed economy. These ideas began to gain credence with the emergence of stagflation, a stubborn combination of high inflation and economic stagnation that plagued the country in the second half of the 1970s and seemed to rebut the notion that government could manage the economy effectively. But what occurred was not simply an ideological shift. Opposition to the mixed economy took off because it intersected with and guided powerful economic interests that were themselves gaining political influence. Facing meager profits and depressed stock prices, business leaders mobilized to lobby Washington as never before. They accepted the diagnosis offered by the new market fundamentalists that the source of their woes was not foreign competition or deindustrialization or hostile financial players, but rather unions and government intervention in the new economy, and government intervention in the economy. Once the door opened to the new anti-government stance, policy and profit-seeking reinforced each other. Okay, so as you can see here, I jotted down rent-seeking, but actually I don't think that's what is meant by profit-seeking in this case. Rather, so the mixed economy is one half profit-seeking. So there's the market side where people manufacture and sell goods, and people buy goods, and so on that side of the mixed economy, the manufacturers and those who are selling the goods are seeking profits, And then the other half of the mixed economy is a government that's going to have some authority over the economy to correct market failures, impose some taxes so that quality education and basic research can happen. Okay, so that's the mixed economy in this new anti-government stance, rather than government policy being a counterweight to the markets, that is to profit seeking. Now government policy and profit seeking are reinforcing each other. The free market movement advocated financial deregulation and tax cuts, and these policies helped fuel a rapid and sweeping shift in corporate America. Companies faced intense pressure to become better integrated into an expanding global economy. Even more important, they faced intense pressure to become better integrated into an expanding financial sector. As corporate America orbited ever closer to Wall Street, it adopted Wall Street's priorities. So corporate America would just be the corporations that are making things or providing services. And then Wall Street specifically would be the bankers and traders in Wall Street, or it could be online now, or in Chicago, or wherever it might be. As corporate America orbited ever closer to Wall Street, it adopted Wall Street's priorities as its own: immediate stock returns, corporate financial engineering, and extremely high executive pay closely tied to share prices. Meanwhile, the constraint on top management created by organized labor was rapidly weakening as unions struggled in an increasingly hostile climate. The result was not just enormous fortunes going to a narrower and narrower slice of executives. It was also an enormous shift in power toward a new corporate elite that was much more hostile to the mixed economy, much less constrained by moderates in government or by organized labor, and much more in tune with the new celebration of the market. In retrospect, the economic tumult of the 1970s looks less baffling than it did at the time. The surge of inflation reflected both singular shocks, notably the 1973-1974 OPEC oil embargo and obvious policy mistakes, Johnson's guns and butter spending, that's spending on the Vietnam War, and Nixon's urging of loose monetary policy to secure his re-election. Productivity growth slowed as the burst of economic activity after World War II gave way to the more normal expansion of rich countries at the edge of the technological frontier, and the United States faced greater competition from its affluent trading partners as they recovered from wartime devastation. Okay, so just to look at that again, in retrospect, the economic tumult of the 1970s looks less baffling than it did at the time. The surge of inflation reflected both singular shocks and obvious policy mistakes. Productivity growth slowed as the burst of economic activity after World War II gave rise to the more normal expansion of rich countries at the edge of the technological frontier, and the United States faced greater competition from its affluent trading partners. But inflation captured the public's attention and drove the increasingly panicked national debate, even leading Jimmy Carter to appoint the prominent inflation hawk Paul Volcker as head of the Federal Reserve. As expected, he raised interest rates sharply, triggering the worst economic downturn since the 1930s. Not only did the recession probably cost Carter the 1980 election, it battered the economic reputation of the Democratic Party. The episode paved the way for Ronald Reagan to pursue a very different vision of government's relationship to the economy. But however sobering the economic challenges of the 1970s might have been, they did not need to tarnish the entire edifice of the mixed economy. Getting macroeconomic policy on a sounder track and confronting heightened foreign competition did not require unwinding government's constructive role in ensuring broad prosperity. The social institution of the mixed economy could have been updated, the balance between effective public authority and dynamic private markets could have been recalibrated rather than rejected, nor did popular pressures demand radical change. Voters may have turned right as inflation increased, but the conservative shift in public opinion was short-lived. It was the conservative elite's turn against the mixed economy that just kept going and going, even intensifying over time, and it was that which ended up bankrolling and driving the ideological warfare that ensued.